Okay, there we go. We are recording. And while we go, I'm going to make an intentional effort to go pretty slowly. I don't want to just like blast through this. And I'm doing that only because I know when I first got introduced to some of these ideas, I was like, whoa, 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 slow down. Like it didn't really sink in. And so even if you're watching this live, I would encourage you after the fact, like go back and rewatch this thing maybe 2 or 3 times just so you can like ingrain the one idea or two ideas like into your brain. That's usually what it takes for the human mind to like not only learn something new, but you're in effect, you're learning a new language. So there's a lot of words that I'll put out and you'll be like, I don't know what that word means, Brandon. It's okay that you don't know what it means now. Just like keep reviewing the material and eventually you'll start to kind of pick up on what all these things mean in terms of like the whole ecosystem. So to get us rolling, I'm going to share my screen here. And at any point, if you have a question or if you want to chime in, just go ahead and drop a little comment in the messenger box there. And as I see comments pop up, I will make an intentional effort to address those as they pop up. And let me see, where is my, trying to see if I can get the view for people in the waiting room. Oh, well. If anyone happens to notice someone in the waiting room, please, please let me know. All right, so we're going to dive in here. And to kick us off, I'm going to start with just some basic principles here. And number one is acknowledging that we're learning how to leverage value investing strategies in the world of decentralized finance. So in direct opposition, well, not really opposition, but in stark contrast to what a majority of the crypto or DeFi world is teaching right now, right? Everybody's teaching, find the thing that's super new and super low, buy it, sell it in a week for like a 20x, a 50x profit, and then just like get out and move to the next one. Does that work? It can work. It has its place. It's just that it's so unbelievably stressful. Nilofer, yes, you will get the recording for sure. Everyone will get the recording. Absolutely. So we are going to be addressing more of a value investing strategy. And what that means is putting your money to work. In the example I'm going to show you today, it is a strategy of putting your money to work in liquidity pools, but we're going to take some time and evaluate some principles. Well, how do you decide which liquidity pools are most appropriate for me and my strategy based on number one, my macro beliefs in the market, but also based number two on like my priorities and my goals that I have for myself. So real quick though, I want to do a recap of the top 5 mistakes. This will be a great one to rewatch in the group if you want to do a review, but I wanted to do it here, just like a quick little 30 to 60 seconds on each one. So you understand like what I'm basing this curriculum on. A lot of it is the mistakes that I made early on in this world. So number one, investing in projects I didn't understand. And that was primarily in the sense of I did not understand that in the world of decentralized finance, not all projects are created equal. They are not all currency and they are not all coins or tokens, okay? They are different projects for different purposes. And when you look at them through that lens, you then realize, oh, the price of a token can actually be a reflection of the real world value that this project is providing in the realm of decentralized finance. In the same way that on a typical stock chart, you want the price of the stock to pretty much more or less reflect the value of what that business is actually doing in the real world, rather than just a randomized price on a chart. Okay, number two, chasing more without a plan. This is where, hey, I invested in a coin, I got a 20x gain, but that's not enough for me. I'm going to leave it in because I want more. As soon as you start chasing more, number one, you open, I'm speaking for myself, you open yourself up to operating in the frame of greedy a-hole rather than savvy investor. And so when you have a plan, meaning I have a set time frame, I have a goal amount in my mind. Now, when you get what you need on the daily, weekly, monthly, yearly basis, you go, great, I have what I need. I am on track to achieve my plan. I don't need more today. And what it does is it puts you in a state of mind that allows you to be calm and cool and collected rather than always operating in a state of like frenetic anxiety where you're always chasing more and more and more and more. Number three, I had a one-dimensional perspective on DeFi. This is related to number one. You'll find that all of these are actually related. It's kind of like just one big thing here. My one-dimensional perspective on DeFi was not understanding that there's more than a buy low, sell high, day trading type of an approach, which is why I designed the curriculum for today the way that I did. Number four, a lone ranger approach, meaning I was trying to operate like on my own and just like kind of doing it here and there. But I didn't understand that like you need a community behind you. Actually, you need people to help support you. A great example of this, in one of the other mastermind groups that I'm in, there was a guy that lost a lot of money. I mean, we're talking, I believe it was like $500,000 or something like that. He got it stolen out of his wallet from a hacker. Now, in the world of blockchain technology, you know that every transaction is recorded. So if you know what you're doing, you can actually track where that money went. You can show which wallets it was deposited into, and then you can track it back to a centralized exchange, typically like a Binance or a Coinbase, and then you can actually find out who that person is. So decentralized finance is no longer completely anonymous, but you like really have to know what you're doing. And because we were in that community together, someone else in the community had a connection with someone who does just that type of work, and they were able to recover his $500,000 because he was connected to the right people in the right communities. So are there shady characters in the world of DeFi? Absolutely. But the more that you surround yourself with a community of other people who are living and operating in integrity, the less likely that it will be that you fall for the scammers and the hackers that are out there. And finally, number five, only following one voice, the crypto expert myth. For a long time, it was like, hey, I'm going to look at this guy and just do what he does. But then quickly you realize like, hey, in the world of decentralized finance, really there are no experts because it's so brand new. There are people who like are smart and who know what they're doing and who are applying principles of finance to the decentralized world. But when I say that the expert myth, it's like, I'm not an expert. This guy's not an expert. No one's really an expert. So you actually want to diversify the voices that you are listening to in the space. And obviously there's a point of diminishing returns where it becomes absurd and you're listening to 100 voices instead of maybe like 3 or 4 that are actually like, credible, authoritative sources. But when you realize that no one's an expert, you're free to receive the information with a grain of salt for what it is and continue to do your own research and operate from a state of empowerment and resourcefulness rather than, oh, I don't know what I'm doing. I have to listen to the expert guru out there. Paul asks, how did they hack his wallet? Paul, I do not know. Typically, hackers are using technology for purposes that it was not meant to be used for. So they're usually really smart, crafty people that know how to game the system in a way that it wasn't designed for. And most projects will have some sort of like vulnerabilities in them. And that's just the nature of all things internet-based, right? Like someone's using it in a shady, creepy way. But again, because of the blockchain technology and the way it tracks everything, there's always a path back to find out who that person is, no matter where they are in the world. Okay, a few basic principles. These are the underlying principles that shape how you develop your lens through which you can evaluate projects for their long-term yield potential. Now, at the end of this, I'm actually going to show you, hey, these are a few projects that I've been looking at through this lens, why I think they're good, why I think they're valuable, why I think they have long-term potential, why they are stable and not as volatile as some of the other stuff out there. But I also want you all to understand how I'm evaluating these projects so that over time, and we'll get more into this over the course of the mastermind as well, over time, you can understand how to evaluate projects for yourself and ultimately make your own decisions about which ones are going to be the best choices for you. But I am going to give you an example of a few of mine. And again, none of this is financial advice. I'm not telling you where to put your money. I never would do that. But if you want to follow along with what I'm doing and you resonate with that, you're more than welcome to. So number one, I asked myself, who is leading this project? Once you realize that, hey, it's not all currency, not all projects are created the same, you realize that the leadership of the project is going to be the primary determining factor in whether or not that project is successful. Because it's like any other business venture in the sense that there's probably going to be some marketing, there's going to be some internal team actions and effort and development. Does the leader know how to guide a team of developers? Because typically the developers who are actually coding these contracts on the blockchain, they're not necessarily great at leading projects. They're just the people like writing the software itself. So you need a leader who kind of like understands how to organize and manage that type of group of people. And I've seen a lot of projects that I thought had really good potential. And then as I got further into them, I realized, oh my word, like this guy is not engaging people in the Telegram group. He's not giving clear and concise answers. This project can go nowhere but into the ground. And later I'll give you an example of that one that I got into early and quickly got out of only because of this, only because I realized, oh, this guy's a chump. He's not being helpful. And if he as the leader is operating in this way with his investors, chances are he's not a great leader and the project is doomed to fail. Number two, where does it fit within the ecosystem? So there's two things here. So if you're taking notes, you probably want to write both of these down. Number one, the broader ecosystem of like the entire decentralized finance world, meaning does this piece of the puzzle fit in a way that makes sense for other projects to interact with it? Meaning, does it carry value beyond just the value that it has? Does it provide value to other projects and other pieces of the entire decentralized finance ecosystem? And then number two, does it fit within an internal ecosystem? Meaning, are there other people who are collaborating with each other and they're actually working together in a productive way, rather than, again, Lone Ranger, rather than trying to be that isolated thing that just says, hey, we're the best at what we do. No one else can do what we do. We're on our own. Like, we're the Lone Ranger. We're going to hit it. Like, usually those projects, they might spike at some point just because of hype and FOMO, but ultimately they are doomed to fail. Number three, is it useful for me? I want to know, can I use this project or collection of projects in order to get closer and closer to my long-term goal? Number four, does it create real world value beyond the greater fool theory? Now, if you're familiar with the world of investing, you might already know the greater fool theory. Simply put, it means that the only value a thing has is the potential of someone else paying more for it later. It's like a micro version of a Ponzi scheme, which, let's be honest, a lot of cryptocurrencies, a lot of the coins that are out there follow this model. They go, hey, buy it right now because 2 months from now you can sell it for more, because more people are going to FOMO in only because they think that they can sell it for more either. But eventually, if it moons too high too quickly, it's going to come crashing back down. We already know that ahead of time. So I want to know, does it actually create value beyond that? Paul, isn't Doge all about this? Yes, Paul, Dogecoin was created as a gag, and they fully acknowledged from the get-go there's no value in this. It's literally just a meme coin, or what some people have termed a shit coin, meaning like it doesn't actually have any value beyond what a group of people ascribe to it, which is why it's gone the way that it has. Now, can that eventually gain mass adoption and become a currency? Sure it can, but really risky. And now everybody's trying to create the next Dogecoin. So now you've also got people trying to create more projects and eventually oversaturation, and it all comes crashing down. So you can participate in a project that operates under the principles of the greater fool theory, and you might get lucky, but we just acknowledge ahead of time that's gambling. And if that's your jam, hey, go for it. But just know it's not really like an investment strategy. It's more like after you've yielded what you need from your legitimate investments, if you have a couple grand left over and you want to go play the roulette table, hey, go for it. Really small risk in terms of dollar amount and really high rate of return. So you could put $100 on 20 different projects and only one of them has to 50x for it to be worth your while. The let it ride mentality. Exactly. If you've got a little extra, just boop, throw it on their house money, let it ride. There is a place for that. And then finally, number 5, I want to know, how does it fit into my long-term strategy? When I started out, I did not have this perspective. When I started out, it was just, hey, can I turn this $1,000 into $10,000 in the next 30 days? Like that was it. That was my mentality. And again, it can happen in crypto. The problem is you're just on the hamster wheel. You got to do it again and again and again and again and again. And all you've really done is giving yourself a second job. Because at that point, like you got to stare at charts all day. You got to be like in Telegram groups. You got to be doing all this extra stuff. And I'm like, I don't actually want to be like 30 hours a week into crypto like that. I just want to do a little bit of research, understand how it fits into my long-term strategy, put some money in the investment, and probably not touch it other than the 30 seconds a day it takes to harvest my yield and then compound it. And we'll talk about the compounding strategy here in a little bit as well. Okay, the values codex. This is simply me acknowledging that in light of the strategy that I'm going to show you, the actual practical, like, hey, here's what I'm doing. I want to first show you why I'm doing it and the thought process behind my actions, so that you don't just go, oh, well, Brandon's doing a thing. Maybe I'll listen to him. Maybe I won't. No, it's like, if you vibe with these values, then you know that like, hey, okay, we're operating from a similar place. Maybe that's something I would get involved in, but maybe my values are a little bit different. So these are not like the set in stone value. This is just how I look at my values that are behind my investing actions. So number 1, I think this should go without saying, but it doesn't, okay? Research, patience, restraint, that's a huge one, restraint, and fewer moves equals predictable profit. Nothing will get you wrecked faster than constantly trying to move stuff around all the time, chasing the latest 1000% APR promise, chasing the latest it's going to the moon promise, like putting your money all over the place versus having the restraint and the patience to go, no, I did my research. This is where I'm putting my money. And I know I'm going to get that 0.25% per day or more. And I know that that actually gets me to the goal that I need to be at. Ecosystems create portfolio stability, meaning that if you are in the right liquidity pool, then what you yield out of that liquidity pool will go to work for you in other ways beyond just immediately selling your yield for profit. I'm going to flesh this one out a little bit more when we get to the example, but just know that the premise here is that you want a lot of different projects that are interacting with each other that incentivize holders to stake for rewards long term and to hold rather than constantly selling. Number 3, asymmetric risk reward ratios reign supreme. Now, this is just a fancy way of saying asymmetric risk reward simply means that I want very little risk for a very high potential of reward. How do you do that? Well, you balance it out. Now, for me personally, I want a majority of my portfolio in very low or no risk with pretty good returns. And again, in the world of crypto, doubling or tripling your money every year is considered just pretty good, which is still insane, but it's just considered like, yeah, that's not bad. And then on the other side, I want to put a fractional amount of my portfolio in extremely high risk, but extremely high reward. So I prefer to offset them in that way, meaning more over here on the low risk side, fractional over here on the high risk side, so that I can still leverage the high risk plays, but only like as a side gig with any extra or residual that I have. Number 4, removing the downside versus chasing upside. What this means is rather than thinking from the frame of how can I get more, how can I chase the upside, how can I get 20x, how can I get 50x, I'm rather going to focus on just removing the downside, meaning very little risk, meaning that I'm not losing money. If I focus on not losing, then over time, I will accumulate and ultimately I will win. If I'm 100% focused on chasing the upside, chances are, just human nature, not just me, but anybody, human nature is you'll probably get wrecked because you're chasing that more, chasing that more, chasing that more. And then finally, productive assets versus non-productive assets. Warren Buffett talks about this a lot in relation to Bitcoin. And actually, if you know Warren Buffett, he's like not a fan of Bitcoin and cryptocurrencies in general, but it's because he doesn't yet understand how they can become productive assets. So the metaphor that he uses is the farm. He goes, look, if I have a farm and I have all this land, then at the end of the year, I evaluate what did I produce? What was the yield of that farm? I got corn, I got soybeans, I got potatoes, I got whatever. You get the asset, you get the yield, but you also still have your farm. So you didn't lose your base asset. That type of productive asset setup is possible in the world of decentralized finance, where you create a base asset, which is in effect your farm, and it's literally called farming in the world of DeFi. And after you set up your base asset, you leave that there and you produce something from it. And then you still have your base, so it never dies. And in fact, over time, you gradually add to your base. So in this metaphor, it would be like buying 1 acre of land every 7 days and adding to your farm. Versus non-productive assets, this would be like, for example, buying gold. Gold can be a store of value, but at the end of the day, the gold itself does not produce anything else beyond this is a brick of gold. So you can use it to store your value and maybe like hedge against inflation over time, but it's not going to yield you additional gold. It's just going to sit there in the safe. Didn't Warren Buffett just invest in a Brazilian crypto bank? I have no idea. Maybe he did. And Paul asked, isn't most crypto a store of value? Paul, some of it is. And that's what we're going to be looking into today. I'm going to show you a couple of assets that I believe, you don't have to agree with me, that I believe are legitimate stores of value. The problem with just like blanket statements of crypto as a store of value is that they're not all designed to be that. And to create an actual crypto store of value, it takes a very intentional contract design. For example, when you see things like Bitcoin, that is a legitimate store of value, in my opinion, limited supply, fixed supply, meaning there's only ever going to be a certain number of Bitcoins ever in the world. And then they are slowly minted over time, meaning brought into existence over time. And then there's not, it's deflationary in nature, okay? And not all coins are created like that. Some coins are intentionally inflationary, some coins are intentionally unlimited supply, and some coins intentionally, for example, burn their supply gradually over time. So there's different purposes for different currencies for different projects. I meant the more known like Bitcoin and Ether. Probably long-term, those are both probably good stores of value, yes, but we don't know for sure. Safe to say, probably Bitcoin is going to be a good store of value long-term, yeah. All right, let's get into the good stuff. Store of value, or sorry, store of value, you got that on my mind now, Paul. The 12-year strategy and some simple math. So I'm going to pull my little writing tablet over here. And again, these are just examples. Okay. So when I say things like, oh, we're going to start with $10,000 You can start with more, you can start with less. That's irrelevant. I'm just using 10K as like a nice round figure because it makes the math super easy. So let's say, and again, this is the perspective here is a 12-year time frame. Do you have to use 12 years? Not necessarily. Me personally, I sort of in my own head, I'm 40 years old, and I had a desire to retire like completely by the time I'm 50. So in my mind, I've got like kind of like a 9.5 year time frame, but I'm also acknowledging that, hey, if I have to wait a couple extra years to make it happen, I'm okay with that if the difference between year 10 and year 12 is another 20 million. Okay. So that's just me personally and how I think about this. But for the purpose of illustrations, let's do a 12-year time frame. $10,000. Now, if I multiply $10,000 by 2, so just over the course of a year, if I double my money, you go, great, I got 20,000. It's kind of like, well, gee, that's not that much yet, is it? Well, no, not if you're planning like a good, long, lucrative retirement. 20,000 is not going to get you very far. Okay, but then after the second year, that's going to be 40,000. Okay, and so on. You get the point. Double, double, leave it in, double, leave it in, double, leave it in, double, leave it in, double. After 12 years, here's where it gets fun. After 12 years, just in the comments, you might have already seen this, but in the comments, just jot down how much you think it's going to be. Just don't actually like calculate it, just off the top of your head. What do you think that's going to be? $10,000 doubled every year, compounded after 12 years. What do you think the final result will be? Let's drop it in the chat. Paul Goody, 43 million. Who else has a guess? Paul, that's really good math off the top of your head. It's actually just under 41 million. Michael, yeah, shitloads, exactly. Compared to the 10,000 that you started with, okay? So again, this is not a promise of return. This is not me guaranteeing anything, because if you know how this world works, you have to operate with the frame of there are no guarantees. It could all blow up tomorrow. I don't think it will, but you just have to, but let's be realistic. Like the stock market could blow up tomorrow too, right? Like people who lived through 2008 and got their entire retirement portfolio reduced by whatever it was, like 80% or something crazy. It's called the lost decade from 2008 to 2018. Basically, from 2008 to 2018, you came back to break even over the course of 10 years. So when you say in the world of investing, nothing's guaranteed, it's like, yeah, but that goes for the regular stock market too. So we all just have to ahead of time, like accept a certain amount of risk. And as soon as you accept that and you just go like, oh, I'm responsible for everything in my life financially, everything gets better because now you're empowered to go and do your own thing rather than operating from this state of like, wow, so-and-so told me this was a guarantee or whatever. The mutual fund guy told me I was guaranteed 12% a year for 10 more years. And, you know, now it tanked. Like, no one can guarantee you anything. Regular stock market, decentralized finance, all of it. The variables of doubling in a perfect world, investing, actually delivering this ROI. The variables of doubling are tied to in a perfect world of crypto. No, Paul, it's actually not. I would say in the world of in a perfect world, like in that scenario, this is probably more like 5 to 7x per year. That would be like you're crushing it and you're doing amazingly well. Okay, when the reason I use doubling it every year as an example is because that return in the world of DeFi is so insanely easy that it's not an unrealistic expectation. So we plan for double it every year, but if you get better than that, you just go, cool, I'm ahead of the game. Maybe I'll finish in 10 years instead of 12. We're just collapsing time a little bit rather than getting greedy and going, I'm going to go for the 7x. I'm going to go for the 8x. That puts you in that state of chasing more and just human nature. Again, I would do it too. You'll end up making poorer decisions rather than if I shoot for that 2x, you might get more than that. And if you do, you'll be happy. But now you'll have the emotional experience of, cool, I'm ahead of the game instead of, oh, I only got 4x. Oh, I only got 5x this year. So again, putting it into perspective, even if all you ever did was get 12 years, double your money on average, maybe 1 year you only get 50% return, but then the next year you get 300. So you're still averaging doubling your money. Okay. But then you'll get to that 41 million in 12 years. Now you can do your math, you can do your own math, right? Start with 20,000, start with 50,000, whatever you have that you're comfortable putting into a product like this, just do it out. It's just the number times 2 to the 12th power. That's it. Your calculator is going to spit you back out the number for what that total return would be. Paul, collapsing time in earning returns is a wonderful thing. Yes. And Eric, compounding is a wonderful thing. 100%. Okay. So now I want to give you another example. And again, this is more to just show you like the absurdity of this math. Let's say I only got 10% per month. Okay. And again, in the world of DeFi, if you went 30 days and you went to your friend and you're like, well, I put in 10,000 and it's 11,000 now. In the world of DeFi, we'd laugh at you, right? We'd be like, 10%, man, you must be doing something wrong. But consider this. After 1 month, that 10,000 indeed becomes 11,000. Okay. Now, if I do that again every month for all 12 months of the year, and I keep it in and I compound it, I actually end up at the end of the year, I forget the exact number. It's around 31,000, just over 31,000. Meaning if you yield 10% monthly, after a year, you are 3x what you started with. So this is actually better than this example I gave here. 10% per month will get you more than double your money every single year. Okay. So again, just illustrative purposes. Yeah, Paul, traditional investing, you are doing well if you double your money every 3 to 4 years. Exactly. And actually you're doing like really well. Then typically they'll promise you whatever it is, like 8 to 10% per year, and you're doing great. So all we're acknowledging here is that these numbers are insane, even though in the world of crypto, they're considered like meh, not that great. Okay. The other example, 0.25% per day. And I forget what this one comes out to. It's something like, 24,000. Meaning, and this is how I'm going to show you how you can, because this directly ties to yield farming. Okay. So yield farming, let's say you started with 10,000 and 1% of 10,000 is 100. So 1/4% is 1/4 of that, which is $25. So if I put my money into a yield farm, and let's say it's 10,000, just to make the math easy, and I come back the next day and I go, oh, I only got $27. Like, yield farming sucks. Forget this. But you don't realize if you take that yield and you put it back and you keep going every single day, at the end of the year, you're sitting at around 24,000. Meaning 0.25, 1/4% per day is better than your goal of doubling your money every year. All it does is put it in perspective. So if I show you a farm and this farm gets, and you put in 10,000 and the next day you look and you only got $26 out of it, you can go, oh, okay, I'm fine. Now, there's more layers to it than that. I'll explain that in a little bit. And you know, as we go through the mastermind, this will be something that we constantly revisit, is how to evaluate not just the yield, but all the other variables that are factored in. For example, if you yield a certain asset and then that asset appreciates, not only are you getting the free yield, but you're also getting compounded on top of that yield. So it's like compounding on compounding on compounding. So there's other variables. Just for the sake of simplicity, I'm acknowledging, even if all you ever got was 1/4% per day and you didn't have the additional variables in there, you would still be doubling your money. You'd be better than doubling your money every single year. Paul, yield farming automated. It can be the product, and that would be another crypto project, DeFi project called an auto compounder. The projects I'm going to show you, they are getting ready to release their auto compounder. And I only know that because again, I'm not the Lone Ranger anymore. I'm in a few other crypto masterminds with some people that I know personally, and they kind of give hints along the way of like what's coming. So I happen to know a little bit inside scoop that the auto compounder is coming. In the meantime, though, yeah, you're going to have to spend probably 2 minutes a day clicking buttons. So, but if I had to spend 2 minutes a day clicking buttons for the next 12 years to get $41 million, I think I would do that. It's not that outlandish. All right, so we've got the examples. And as always, guys, like questions, and Paul, thank you for your comments and your questions as well. These are very good and very relevant. Now, I want to talk about primary, secondary, tertiary assets. Don't let the fancy words scare you. It just means I've got my base assets, I've got another one, and I've got another one on top of it. Okay, I'm going to diagram this out for you to show you what we're doing. Primary assets, these would be your liquidity pairs. Okay, so if I was going to diagram this out, here's my primaries here. We're going to call this LP. Okay, that's just something. If you don't know that already, it's something I want you to learn. You'll get LP tokens, meaning liquidity pool tokens. It just means a liquidity pool. Okay, so your primary asset that you want to be your literal farm or metaphorical farm, this is the one that you don't really want to touch. You don't want to ever take it apart. If anything, you want to keep adding to it. Okay, so usually the primary assets in a liquidity pair, it will be things like, oh, and again, we're providing value to a system, right? So if I say I'm providing, let's use Uniswap as an example, because that's it's literally the biggest exchange right now on the ETH network or anywhere else. I provide a liquidity pair of Uniswap and USDT or something like that. Now people can transact, or I'm providing a USDT and an Ethereum liquidity pool so that people can trade for those assets on Uniswap, and it's safe and fast and effective. Okay, I can provide that to the system and I get rewarded by it. Typically for primary assets, we want, and there's a lot of different ways to do this. Okay, so I'm just kind of like narrowing it for the sake of this workshop. We'll get into more strategies throughout the next couple of years in the mastermind. But one example would be a stable asset plus a DEX token. A DEX is a decentralized exchange. And if I provide a stable asset, let's say BUSD, which is tied to the US dollar, and then I provide like a Night swap, which is the example I'm going to show you. I got Night and BUSD. I provide a liquidity pair. Now I've added to the value of what that exchange platform can do. And so they will now reward me. Okay. Or you might say, let me do a stable asset plus a treasury asset. Treasury asset would be like a solid store of value, kind of like we were talking before. The example I'm going to show you later is going to be Guard and BUSD. BUSD is the very stable asset, and then Guard as the treasury asset that exists inside another ecosystem. Or we might say a DEX plus a layer one, meaning like a decentralized exchange platform, as well as the network upon which that decentralized exchange platform operates. If you don't know what that means, that's okay. Like I said, come back, watch this later. Over time, this makes more and more sense as you acclimate to the different ways that people talk about how to approach this and view this. Just know that as a concept, your primary asset, you want it to be a liquidity pair in this example, okay? And you're also willing to put new capital in. Meaning if you say, hey, I've got an extra, let's say $1,000 a month that I want to allocate for that I'm going to put for new capital into my investments, you would feel comfortable putting new capital into your primary asset versus some of these other assets. You might not buy them outright, but you're willing to accumulate them as rewards or emissions for free. Okay. Then the secondary assets, Primarily in this example, we're going to be talking about DEX tokens, meaning you provide liquidity to a decentralized exchange platform so that other people can transact safely and effectively. And as a reward for building their decentralized exchange platform, that DEX says, hey, thanks, Eric, for providing that $10,000 of liquidity that you're staked and you've locked that value in there. We are now going to, every day you leave that in there, we're going to give you some of our DEX tokens. You can hold on to those. You can stake those for other rewards. You can sell them for profit, but here you go. Here's a bunch of DEX tokens. And you go, great. We want the secondary assets to like have a stable-ish value, meaning like, yeah, we want it to appreciate over time, but we're actually relying on it being like pretty stable. These are assets that we don't want to moon, right? Which is the opposite of most crypto. Most of the time people are going like, oh, when is it going to go to the moon? When is it going to go 100x? No. In the case of a decentralized exchange platform, a DEX, we want those tokens to have stability in their value and very slowly, gradually, maybe appreciate over time, so that as more are minted and I'm receiving them as reward emissions, I'm getting something from it, but I know that the thing I'm getting isn't going to shoot up to the moon and then crash right back down. So I have a little bit more faith in the stability of what my secondary assets will be worth over the long term. We want these to be things that you can yield from your farms, and we want them to be stakeable for other assets because, pull out my little diagram here. When I create my farm, which is my liquidity pool, that's the one I don't want to touch. Now I want to get my secondary, and if I wanted to, I could immediately sell these secondary assets for a profit, but I would then not be compounding. So if I start with 10,000 and that 10,000 doubles to 20,000 at the end of the first year, and I just take the 10,000 profit, I go, cool, we're going to have a great Christmas this year for 10,000 bucks and we're going to take a vacation. Yeah, I had fun. It was great. It was free money. But now year two, I start over again at 10,000. Okay. So it's a short-term perspective that you would immediately sell off for profit. Rather, long-term perspective says I'm going to take these secondary assets, and like in this example, it's a DEX token. I'm now going to stake those DEX tokens, again, leaving them in the system so that they can provide value for other people. And I'll get a tertiary asset. And that would be the type of thing that I can then sell for profit if I want to. So my farm stays intact. The yield I get from my farm stays intact. And then I use it to create something that might give me profit. Okay. If this were a real world example, I might say I have my farm and I grow corn and soybeans, but instead of selling the corn and soybeans for profit and then spending that money, I'm going to take that corn and soybean, I'm going to sell it for a profit, but I'm immediately going to invest that money in someone else's farm as like a long-term investment. And then over time, now I have my farm and I have my neighbor's farm. Okay. So it's a different mentality. The one says, I'm going to grab what I can right now. The other one says, I'm actually aiming for these over here. And I acknowledge that that's going to take me a while to do that. Okay. And I'm going to show you in the example one way to do this. And then in the mastermind over time, we're going to take a look at multiple different ways to do this. Because again, this is not like a set in stone. This is the only way to do XYZ. It's here's one way to do this. It's how I'm doing it. And then you're free to do it that way or explore other options as well. Okay. So my tertiary assets, these are the ones I want to yield from my secondaries. I don't want to buy them because typically, well, not always, but sometimes these are assets that fluctuate wildly. They're volatile. So I actually want to get them for free and wait for them to spike in value and then sell them. But then with that profit, I can turn around and add to my original farm. Again, if I'm doing the long-term approach, okay? So that my original base asset grows over time, so that I get 2x my money every year, but then potentially I get a little extra. And then I get to decide, hey, I started with 10K, I got 20K. Do I want to keep the extra profit and just play with it and have fun? Or do I want to collapse time and put it back in so I retire in 8 years instead of 12? Now you're in the driver's seat, but because you set your expectation at, hey, if I double my money, I'm winning, that's the expectation. So everything above that now becomes a bonus. Yeah, Michael, no problem. You'll have the replay so you can watch the rest later. Thanks for joining. Okay, I'm going to give you some examples, and then we're going to do a click-by-click walkthrough. I'm going to show you, like, this is where you go to find this decentralized exchange. Once you have your wallet funded, this is how you transact. And I've got my wallet funded already so that I can show you, like, I'm actually going to live here purchase the assets and create a liquidity pool and put it into a farm and show you how it actually happens. Okay. So the examples I'm going to give you, and again, there's lots of ways to do this. Okay. If I had Guard BUSD, which is the one I'm going to show you, again, one treasury asset, one stable asset, I'm going to yield Night. Night is a DEX, a decentralized exchange. I'm going to show you why I think it's extremely undervalued right now, which is part of the reason why I want to pursue it, because I know that they haven't even gotten listed on CoinMarketCap yet. And when they do, and all of their actual TVL, total value locked, when it gets registered, everyone's going to start to pay attention really, really quickly, and it is going to rise over time. So it's going to be a great long-term play. And then I can take my Night and stake that in a pool and get Wizard. Wizard is just another project, but it is a launch pad and an NFT marketplace. So it's not one NFT, it's a place where other people can put their NFTs for sale. If you've been around this world, you might have heard of OpenSea. That is like a massive, giant NFT marketplace. Okay, so but Wizard is also a launch pad, meaning other projects come to Wizard in order to get their project from vision into reality and get it out into the decentralized finance world. So again, long term, it's still in the very early stages. Long term, it's going to be a great play because of the value it provides to other projects. It helps other people launch. It helps other people mint and list their NFTs. Okay, now I could just sell the Wizard for profit because in this example, I'm treating it as a tertiary asset. Or I could sell the Wizard and buy more Guard BUSD and make my farm grow so that the rate at which I yield Night also grows, not just the total accumulated, but the rate at which it accumulates slowly grows over time. And then the rate at which I acquire more of my tertiary asset also grows. Then if I sell that, so you see how it's compounding on top of compounding. So now instead of 2x on the year, maybe 1 year I get 3x and I go, cool, well, now what am I going to do? I could sell the extra, or I could just collapse time and accomplish my goal sooner. Another example would be I buy Guard USD, I pair it, I get Night, and then instead of going straight for a tertiary asset, I just use my Night to get more BUSD. And then every month I buy more Guard with my new capital allocation, pair it with the BUSD that I yielded for free, and make my primary asset grow over time. And then this cycle just around and around in a circle repeats itself. This only works if you are investing in projects where most of the investors, or a good chunk of them, understand this approach. It does not work with projects where people are just trying to make 50x in a very short time frame. So you'll see, for example, projects that are very safe to invest in would be like Uniswap and Ethereum. If I pair Uniswap and ETH and I put that in a liquidity pool, it's 100% safe, but I'm probably only going to get like 15 to 19% per year in return. Because they're so safe and stable, because they're so big already, you can still get return, but the return is much less. So that's why in these examples, we're looking at projects that are early but reputable. And in this case, I know the actual humans who are involved in this project. I've met them in real life, and I know that they're reputable people. I know that they're good leaders. Remember the lens from before. And I know that they have the same long-term mindset that I have. So it's easier for me personally to trust them and to put my money here. I'm not saying you should trust them. As with anything, like, scope them out, see what they're all about, see how you feel about it. But ultimately, this is where I'm going to allocate a big chunk of my capital. Okay. Or I could sell half the BUSD for guard, pair it, rinse and repeat. Okay. The strategy is fluid and it's not bound by one linear path. So this is the opposite of someone who goes, this is the one way to do it. Buy this project, sell it, it's done. That's linear. There are opportunities like that out there, but they're not necessarily reputable in the sense of the person's not painting a picture of the big picture perspective. Okay, so I want to show you what this looks like. This is Knight Finance. Okay, and again, I'm using this as an example. There are and we're on the BSC network right now. So on the BSC network, there's a ton of decentralized exchanges. You may have heard of one called Pancake Swap. It's the biggest one on BSC. Uniswap is the biggest one on ETH in terms of total value locked. So this is one DEX on the network, on the BSC network. It's not the biggest one yet, but that's the point, is you're getting in early. Here's why I think it's undervalued. Take a look at this total value locked, meaning how much is staked on this DEX that is available for use. Over $100 million. Now, in the world of decentralized finance, that's a small number, but in the world of like a DEX on the rise, that's really good, especially when you consider, I forget how old this is. It's not even a year old yet. So they've risen very, very quickly. They have over 100 million in total value locked, but look at their market cap down here. Their market cap is they're only valued at 19 million in some. So just like, let's call it 20 million just to make the math easy, because they've only minted this many coins and the coins are only worth about 51 cents each. Okay. But they have over 100 million in total value locked. Anytime I see a project where the market cap is this much lower than the total value locked, all it means is it has more value in it than people are noticing right now. Okay. So if we notice early, this is actually an undervalued project, it's worth it to get involved in this somehow. Now, I don't necessarily want to just go buy a bunch of Knight. You could if you wanted to, but I want to create a farm at like a primary asset, a stable farm, and then I want to yield Knight so that every day I'm getting more and more Knight, so that over time I get what I'm after. Okay. Let's go to the farms and I'm going to kind of walk you through how this would actually happen. Okay. Now, a note about APR, because I know you'll see it here and you'll be going like, but I thought you said 2x your money every year, Brandon. What's going on? Because this guard BUSD pair here, it says APR 17.69%. You go, that's not 100% return, Brandon. Like, what's going on here? That's where the other variables come into play. Okay, so typically a user interface, a UI, will display APR, and other DEXs use this too. It's more of like an estimate because it doesn't take into account the appreciation of the base assets and the appreciation of the yielded secondary assets. So you have to account for everything when you're planning on doubling your money each year. Okay. So just know ahead of time, this doesn't matter. It kind of matters, but it's not cut and dry. And the example I want to share with you, because I experienced this recently, there was this project called AOD, Age of DeFi, and it was like 800% APR. And I was like, oh, that seems like a cool project. And it wasn't just a high APR. Like I read about it and I was like, actually, this seems like pretty cool. It's like a yield aggregator. It's very useful. It seems like it could be a good project. You know, they're partnering up with people that I know, blah, blah, blah. When I got in and I don't know where this number even came from either. It was around, this is for the AOD coins, by the way. It was around 2,000 per coin. I got out early, but over time, it went down to 68 cents per coin. And people are going, I got 900% APR. Look at me, look at me, look at me. Well, it doesn't take a genius to figure out, yeah, you got 900% APR, but your initial investment lost over 99% of its value. So did you win? And in the Telegram chat, people were still going, hey, this seems like a great project. Yeah, it's going down, but the APR is just so crazy. I have to stay in. So people are using this logic of like high APR equals return on my money. And it's not necessarily the case, because if your base asset rises in value, but the yielded night tokens remain the same, the APR is going to show as being lower because it's the same amount of yield in relation to the new value of your asset. But because your base asset rose in value, that makes up for the APR. Now, it took me about 8 times hearing that before I finally understood it. So if that doesn't make any sense right now, it's okay. Come back, watch this later, review it. You'll be fine. Yes, mind blown, exactly. All I want you to take away from this today is the concept of APR can be deceiving, and you can't just look at this number, because I could go down here and go, where's one here? Oh, this one's 382%. This must be the best one. Not necessarily, because GARD BUSD is the most stable over time. And when I show you the chart, you'll see why. Okay. So number one, I know these guys personally, which again, is why I've chosen to invest. I know them personally. I've met them in person, good people. Number two, if I look at the chart, we go all the way back to when they launched this thing. Okay. All the way back, whenever this was, July, middle of July. Okay. And we look at this, and actually let's go on let's do the 1-day chart. We look at this, it's insane. And if you come all the way back here, you'd be like, oh, this is what a boring coin. Like, it's just kind of like going sideways, 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 4 cents. And oh, it mooned, not really, but oh, it doubled to 8 cents. Oh, that's cool, but it's not that great of a project. Oh, it took another spike. It's still only 25 cents. It's not really that great. But the point is, it was designed to be a stable asset that only gradually increases as more and more people use it as a liquidity provider. So it's not designed to be a pump and dump day trading it kind of a token. It was designed to be a treasury asset. So again, we go all the way over here, and we can see that all this stuff happened over here. And right about here, the project owner was telling us, guys, listen, we designed it to initially stabilize around $1, and then later over time to go a little bit higher than that and maybe stabilize around like $8 to $10, somewhere in there. Okay. So I had that as a frame of reference, like, oh, it's designed to stabilize around $1. So what happened? It spiked up to about $1.50 almost. And then it took a quick dip, and then up again, and then back down. And today it's right around $1. Okay. Meaning that months ago, the project owner told us, no, we're engineering it intentionally to at some point stabilize for a while around $1. And then when we attract more investors, then it'll kind of gradually increase over time. So all that to say, you don't have to use this one if you want to, but this is the one that I'm going to be providing the example with today. So first things first, and let me make a note of this. We're at about 1 hour into the recording, just for my own, if you watch this later and you want to go right to this, it's about 1 hour into the recording. So I use MetaMask as my wallet. That's metamask.io if you want to download that. I just integrated it with my Google Chrome browser. It makes it way easier. And then I'm already connected here, but if I wasn't, this little orange button here would say connect, and I would click that and connect my MetaMask wallet to it. Okay. So I have prepared my wallet with the assets that I need, but if you went to trade and exchange, this is where you would swap. In most cases, your BNB. So you have to have BNB in order to make transactions on the BSC chain on the network. It is the fuel in the same way that ETH is the fuel of the Ethereum network. So you have to have BNB. I started with that. And then I like to leave, you'll see I've still got, I'm going to zoom in here. I've still got a little over 1 BNB in here. That's way more than I would need for transaction fees, but I like to have extra transaction fees. So I have left one BNB in there. And then I already know I'm going to be swapping about $1,500 worth of BUSD and $1,500 worth of guard to make an equal liquidity pair. So I did some trades. I said, trade BNB for BUSD. And I'm not actually going to do this part of it because I already did, but let's say I traded 1 BNB. It's saying that you'll get this many BUSD. I would click swap. Great, I did it, okay? Then I would say, I wanna trade this and I wanna get some guard. Great, how much BNB am I gonna swap? This is how much guard you would get, fantastic. So, but I already did the initial swaps. And if I go to my farm assist here, it shows me, okay, Brandon, right now inside of this wallet, you have about $1,900 worth of guard, you have $1,500 worth of BUSD, and you have 1 BNB, that's how much that's worth. And for some reason, I have some tether in there. I think I accidentally put that in there. I'll have to take that out later. So anyway, this is the total net worth of that wallet at the moment. Okay, I'm only going to invest 3,000 in this farm right now, just because I have a little extra guard and I want to keep the BNB for transaction fees. So now, once I've got my components of the liquidity pair, I've got my BUSD and my guard in this example. For you, it might be Knight and BNB or whatever pair you want to make, doesn't matter. I go to the liquidity section. Okay, it's right here, but I could also find it on the main navigation over here. Oh, and by the way, this is initially if you go to app.knightswap.financial, app.knightswap.financial. That is this, that's the URL for this decentralized exchange platform. Okay, now on my liquidity, I'm going to click add liquidity. And it's going to ask me like, okay, well, what do you want to add? Well, I want to add some BUSD and I want to add guard. Now, I know I have a little bit more guard in my wallet than I have BUSD. So I'm going to click my maximum allocation for BUSD and it's going to tell me, great, you're going to put in 1,500 BUSD. That's going to be about $14.90 guard, because remember, we looked at the chart. Guard is worth a little more than $1 right now. So you would need a little bit less guard to create an equal pair in terms of dollar value. And now the first thing I have to do is approve these two tokens. So I click approve BUSD. Old MetaMask here pops up and says, well, that's going to cost you 10 cents. I'm like, all right, that's a good investment. Just patiently wait. Eventually it'll pop up with a little confirmation here. And this is the part, there it is, approve. This would be a great time to ask questions because in the midst of my clicking, there will be like, hey, wait for this transaction to go through. So if you have questions, this would be a great time to drop those in the chat while this is processing the transaction. Now, even though these take some time, compared to like the ETH network, for example, super quick. And this is really quick today, actually. The Phantom network's even quicker, which is pretty cool. And there's other networks as well. It's just that this one is very reliable. Okay, now I've got my BUSD, I've got my guard. I'm going to click here. This is supply. I click there. You will receive this many pool tokens, LP, liquidity pool. Okay. So basically what I'm doing is putting two things together, and then it gives me a receipt token, which says this receipt token represents these two assets paired together. So I confirm that supply. Again, MetaMask is going to pop up and say, well, this is going to cost you 0.0022 BNB, a couple of cents in transaction fees. So I confirm that. And it says transaction submitted. So close this window and then you wait. Okay. And this is the part where if you've never done this before, it gets a little nerve wracking because you're like, oh, where did my money go? But then it just converts it here and it says, okay, you're all set. You've added this to the liquidity pool. And now look, it says LP tokens in your wallet. I have these, guard BUSD. So now I have one token that represents a pair of guard and BUSD. Paul asks, how do you get BNB from Binance US to your Binance Smart Wallet? I don't know how to use Binance Smart Wallet, but typically wallets have an address. So for example, if I open up my MetaMask here, it'll say copy to clipboard. This is my wallet address. Or if I go account details, this is the QR code for that. And this is my address. Okay, so I would copy this. In this case, it's the MetaMask wallet, but a Binance Smart Wallet probably has the same idea. And then when you withdraw your BNB from KuCoin, Binance, crypto.com, wherever your BNB is, when you withdraw it, it'll say, where do you want to send it? You paste in the address of your wallet, and then it'll go, cool, we're going to send it to that wallet. Then you sit there nervously for 10 minutes, twiddling your thumbs, hoping that your money didn't just vanish into the ether. And it won't. It'll go directly to this wallet. And then after a while, it will show up. Depending on the volume of transactions that are happening, it could take 5 or 10 minutes. It could take even longer. So give it time, just be patient, but eventually it will then all show up inside of your wallet. Okay, so you pay the ETH gas fee for MetaMask only if you are transacting on the Ethereum network. MetaMask, and this is like the nuts and bolts of this. This is something we'll do a couple of sessions of these inside the mastermind. The MetaMask wallet can operate on multiple chains. It defaults to the Ethereum mainnet, and all you have to do is click Add Network, and then you can add the Binance network. And the way you learn how to do stuff like that is you just come over here and you go add BSC network to MetaMask. If you've never done it, and it goes, oh, it's academy.binance.com. And then it says connecting MetaMask to Binance Smart Chain, and it walks you through how to add that to your MetaMask wallet. So one of the reasons personally I like MetaMask wallet, and Binance Smart Wallet is probably going to work just as well. The only downside might be that I don't know if that smart wallet transacts on other networks other than Binance. So you might be pigeonholing yourself long-term. I don't actually know that because I've never used it. But one of the reasons I like MetaMask is because I can transact on any of the networks. And because it's so well established, there's already a ton of documentation and literature onto how to use MetaMask. So anything that I don't already know how to do ahead of time, I can just Google it, and it usually takes me like 30 seconds to find how to do something with MetaMask. Paul, it would be lower gas fees would be to transact on the Binance network, which is what we're doing here, rather than the Ethereum network. Ethereum is more well established, but because it's more popular, it gets congested quicker, and so gas fees go up. I was trying to get BNB to MetaMask, but didn't want to pay the high ETH gas fees. Yeah, you will never pay ETH gas fees to transact on the Binance Smart Chain. You'll only ever pay BNB to transact on the BSC Smart Chain. Okay, so I've got my liquidity. I'm going to go back to my farms now, and I'm going to scroll down, and it says guard BUSD. That's the one that I just built. So I click approve contract. Again, it's going to pop this up, 13 cents. I'm going to confirm that. Wait patiently here. All right, and then it gives me the option to stake. So I'm going to click stake, and it says, well, how much of your LP, your liquidity pool tokens, how much do you want to stake on this farm? Well, I want to do all of it. Okay, little transaction fee, confirm. And then I'll just wait. All right, and then it has now showed up. So it says guard BUSD LP staked. That tells me that my LP tokens have effectively been deposited. Now I can even go over here to Farm Assist, this handy dandy little tool here, farmassist.app. And I can see that now I've got wallet and investment. So it tells me, Brandon, you've got this much invested. And I can look, my total guard is this much, and here's my BUSD. But my total investment is 3,067, which is what I just did. So that's fun. I just made $67 accidentally. It wasn't supposed to happen, but that's always fluctuating, right? So this is the total in the wallet. This is just in the wallet. This is what's invested. And then if I click on this, it'll show me this is just what's invested on the Garden BUSD. Okay, so I can always track this and I can see how much it's appreciating over time. I don't recommend coming in here and checking this every day because that goes against the like be patient kind of like wait it out kind of mentality. But what I would recommend is until you get into an auto compounder, which will harvest and redeposit automatically for you, meaning it's literally set it and forget it. Until that feature gets released, you would come in here every day and harvest your yield. Okay, right now I have 0.004 night that I could yield. That would be silly for me to yield that. So I'm going to wait about 24 hours. And well, in my case, I do all my farming in the morning just to keep it consistent. But then I'm going to harvest that night. And all I would do is click this button and harvest it. And then that night would automatically be deposited into my wallet. And then with that night, I would come over here and I can stake it. Remember, we talked about the primary asset is now, in this example, my Guard BUSD farm. My secondary asset that I'm yielding is Night, which is a token of the decentralized exchange platform. It's a DEX token. And now I can stake that Night and earn a tertiary asset. So now I can earn Spartans, I can earn Wizard, I can earn more Guard, I can even I can even earn BUSD, basically like earn more dollars by staking your Night. And then I can do whatever I want with that tertiary asset. So the point here is when I initially harvest after 24 hours, I'm thinking to myself, hey, I'm on track. I'm better than on track if I'm yielding 0.25% per day or more. But I'm also not married to that number because I know that over time, my base asset will appreciate and the secondary assets that I yield will appreciate as well. So you can have a daily perspective as long as you know that it's really more about long-term what happens over the course of the entire year. After you harvest, when do you transact tertiary? I just do all my transacting once a day. So for me, what it would look like is I would come here, click harvest. I would get my Night. I would go over to Night raids. And let's say I want to do, I like Spartans. We'll do Spartans for this example. And then I would come here and click plus. I don't have any Night available because I didn't harvest, but if I did, it would say, 100 Night or whatever my number is. And then I would click max, confirm, and then it would stake my Night here. And then that Night will start to earn me, in this case, Spartans token. Now, here's the flip side. When you start doing this, you're yielding on your yield. So the tertiary asset looks really, really tiny at first. That's why you just have to have patience and continue to do this once a day over time. Eventually, it starts to compound on itself. And again, by the end of the year, you'll be like, whoa, I'm way ahead of where I thought I was going to be because I stayed patient and because I didn't start just throwing my money around willy-nilly. Yep, yield on the yield. That's where it gets good. If you if you're patient enough to do yield on the yield, it looks like pennies at first, but then you realize, oh, I've got my, let's bring up this again. So yield on me. So if I got my primary asset, and let's say, again, just examples, this is 10K, and I get my secondary and my tertiary. And let's just say, by way of example, this appreciates a little bit and now it's worth 12K, and I harvested over the course of the year 8K. Okay. So that's where now I've got 20K in total. Again, just example figures. Now, if I leave this in here, the rate at which my secondary asset produces tertiary assets on year 2 will also have increased. So not only is my primary asset going up in value, but the rate at which I yield secondary goes up. So then maybe the next year, then that's 16K or 20K. And then when I get tertiary assets, that goes up as well. So the rate at which it accumulates. So I know that's kind of messy, but all it means is if you keep your primary and your secondary assets intact and you're patient enough to not just cash them out right away, you can still get your 2x every year and have a little bit of profit if you want it, and still have a little bit of profit to take out in the meantime. But again, it is a long-term value investing strategy approach. And then what you can do, for example, I might take, let's say at the end of year 1, I got my 2x and I had another $1,200 left over. I'd go, cool, I'm going to take $300 times 4 and I'm going to play with it. I'm just going to go find like some silly projects that might moon over 30 days. And I'm just going to toss in a few bucks, but I'm accepting the fact that, number one, I'm already on track for my long-term goals. So if I lose all of this, I'm not depressed. I'm like, well, that was fun and whatever, but I'm still on track. Or I lose on 3 of these and one goes times 10 and now I've got 3,000. And I go, yay, now I've got 3,000 in play money to do what I want with. And then the next year I get another 2,400 from my tertiary asset because I left everything in primary and secondary, let it compound. And I go, great, I'm still on track. My 10K is now 40K after 2 years, but now I've also got 5,400 and I can play around with that. I can take a vacation or I can go gamble with it more on some of the meme coins or the shit coins as they call them. But I'm doing it with house money after I have established that my primary long-term investment goals are on track. Or 100% of tertiary needed to get to the 2x plus. Ideally, you would achieve your 2x over the course of the year only with primary and secondary. That's why I say don't touch these. Like leave them in there because that's what compounds and accumulates over time. Yeah. And you might even get more than 2x with these, but then you just accept the fact that, great, I just collapsed time. I got less time to get to where I want to go. And I'm still going to have a tertiary asset to play with. Okay. So a lot of stuff all at once. I know it's just like drinking from the fire hose. Strongly encourage everyone to come back, watch this entire sequence again. We only went for about 90 minutes. I thought we were going to go for 2 hours, but we went for about 90 minutes. It's really dense stuff, but it's worth your time. You can even watch it back on like 1.5 speed if you want to, but you want to like ingrain this stuff into your mind. You could take this and just play in that one asset and you could do pretty well for yourself. But obviously, if you want to stick within this community and like continue to grow and develop new strategies, we've got the mastermind coming up. Okay. A lot of you have already invested in the mastermind. I know, but I know there's some people going to watch this on the replay as well. Hey everyone, Brandon here, and I hope that you've enjoyed today's workshop presentation on how to leverage these simplified strategies in the world of decentralized finance in order to create real and lasting wealth for yourself. Before we get into the Q&A section of the workshop, wanted to give you some details about an opportunity to join our Investors Mastermind. This is lifetime access to a group that we've created in order to help and assist you as you implement this strategy. So basically what it means is, yes, there's going to be training and education. You're going to learn all about the world of decentralized finance. You're going to learn all the language, all the lingo. You're going to learn how to set up various farms, all the nuts and bolts, yes, but ultimately bigger picture, it's support and guidance as you implement these strategies. And that's why we've designed it to be lifetime access. So there's zero time pressure to like crank this all out in 6 to 8 weeks or whatever those other kind of short-term programs are. It is meant to be a membership that you can actively participate in for as long as you choose to remain in the world of decentralized investing. And I mean, I don't know about you, but I'm planning on being here for the rest of my life. I mean, blockchain technology, decentralized finance, this is the wave of the future, and we are early. We are very, very early, and we're fortunate that we get to be in a position where we can make decisions like this to get into new technologies early like this and actively participate in them, especially because of the amazing financial returns that are available to us. Now, as always, nothing is guaranteed. I don't guarantee anything. This is the wild, wild west. It's the world of finance. I'm not a financial advisor. So at no point will I claim to be an expert or a guru or, the oracle of picking out which coin is going to moon. It is not that at all. It is just steady, consistent training and coaching on how to implement this strategy if you choose to do so. How much you invest or put in, 100% up to you. I will never tell you how much to put in. I will never tell you where to put your money. This is strictly an educational and informational program along with the community aspect. So you are going to meet a ton of other really cool, savvy investors who are patient, just like you, who have a long-term time preference and who aren't interested in day trading and who aren't interested in all of the hype. Now, I like to be completely transparent because right now you're thinking like, hey, this sounds good, Brandon. How much does it cost? Like I said, I'm totally transparent. It's a 5K program. Okay. There's two options to pay for it. You can do one payment of 5K or two payments of 3K each. So it's a little bit more if you want to split up the payment in that way. And I'm being sincere here. If that is like a stretch for you and you're not going to have any money after that to actually invest into decentralized finance, I would actually encourage you to just stay in the free group for now, learn what you can, and start saving up now so that you'll be ready. Because I mean, you can start with any amount that you want. We've had people start investing with as little as 500, and we've had people start investing with 6 and 7 figures. So that's a totally that's a personal preference, and it depends on where you're at in your investment journey. I just want to be clear that yes, this is the type of program that you pay for it, but it's a lifetime access kind of a gig. Okay, so long term, it is definitely worth it. And again, there's no guarantees. I'm not going to guarantee any return on investment. All I can guarantee you is that you will learn a ton of really cool strategies. You may choose to implement them if you want to, and we're going to work together on implementing those strategies. And at the end of the day, that's the biggest thing. You can have all the knowledge in the world, but if you're not going to actively implement it and take action on it, well, that knowledge is then useless. Most of the people who join our mastermind are able to, if they don't already have a wallet set up, are able to set up their first wallet, open up all the accounts that they need to connect their bank accounts and make some transfers to buy some cryptocurrencies and start yield farming within the first 2 weeks. Again, not a guarantee. It depends on if you are going to take action on it. I'm just acknowledging that if you want to start taking big steps forward in the world of decentralized finance and start yielding now, it is achievable, and it's achievable. The beginning of the journey anyway is achievable in a very, very, very short time frame. If you have any questions along this process, somewhere, wherever you're watching this video, there's probably going to be a link to click down below, and you can get in touch with someone from our team, and they can just answer any clarifying questions that you might have. Okay, it's not a sales call because we already gave you all the information. You already know how much it is. The only reason that you would reach out to us is if you just have maybe one or two clarifying questions before you take that final step and go ahead and enroll. That's all I've got for you right now. I'm going to send you back to the workshop replay, and there's just a short section of Q&A at the end. And who knows, it might be the exact same question that you have. So I strongly encourage you to watch that, glean from it what you can. And ultimately, I'm hoping that I will see you on the inside in the mastermind for the lifetime access membership. Catch you later. And then we're going to meet for sessions like this. We're going to meet once a week, because anything more than that, and it's information overwhelm. Okay. In this world, you only need to make small steps on a weekly basis. The only thing you're going to do daily would be like harvesting your yield and reallocating it. But for the most part, like the higher level education and strategy and things like that, we're just going to do that weekly. And we're going to start with some nuts and bolts stuff, because I've noticed we got so many questions around that. Like, how do I open my wallet? How do I get from the centralized, from my bank account to my wallet? What are the steps there? I've been helping some people with that in the background. So we'll deal with some nuts and bolts stuff, but we're going to get through that as quickly as possible. Ultimately, we want to spend our time on investment strategies and how to evaluate projects that fit these criteria. Okay. So this is not a mastermind where it's like, this is the coin, I'm calling it, it's going up, like you go buy it too. I'm never going to tell you what to do with your money, but I will be transparent about where I am allocating my new capital each month, so that if you want to kind of go that direction or imitate that, you're welcome to. But by no means is it like financial advice. Here's a safe deal. Here's a guarantee. I will never guarantee anything. I'll never claim to be like an investment guru or expert or anything like that. I'm just a guy who likes playing in the world of decentralized finance, and I'm inviting everyone else to play along with me in that space, fully acknowledging like it can be risky, the whole thing could blow up tomorrow, just like the stock market. But we're all a bunch of savvy investors, and we know that, hey, we're responsible for our own money. And if we choose to put it there and we win because of that, it's because you chose to take the risk. And if I win, it's because I chose to take the risk as well. So in terms of like presentation, teaching, workshop, that's all I had prepared for today. I think right now we can just open it up for Q&A, and you can throw yourself off mute. We don't have to limit this to the chat. There's 8 of us here today. Chris, I know you're kind of just like lurking there in the background. That's totally cool if you want to do that, but also feel free to like jump on. And Marius, I saw that you joined us as well. Feel free to unmute yourself or turn on your camera, join in the conversation or whatever. But I'll just kind of shut up now, and anyone who wants to jump in with questions or comments is welcome to do so.
So you think that the Guard USB LP would just be a good like baseline to start with?
Extremely safe and extremely stable. Yes. And right. I say that again because this is from my perspective, my bias, right. Because I know the team involved, and I know that they're actually legit. I've met them in person, and I know what other groups and communities that they're connected with as well. And I know what other like multimillionaire investors that they're connected with. So I know that over the course of the next year, there's going to be a huge influx of new capital specifically coming into Guard BUSD. I know that they're launching the auto compounders soon. And I know that it's, I don't know when exactly, but very soon Knight and the Phantom counterpart Dark Knight are going to be recognized by CMC, Coin Market Cap, which means that all of a sudden, all that TVL is going to get noticed, which means the DEX itself is also going to appreciate very rapidly. That's why I say don't just look at the APR. The APR says like whatever, 19%, but I'd rather my base assets appreciate 3, 4, 5x over the course of the year. Then the APR doesn't really even matter, other than the fact that it's a consistent yield every day.
Right. And then you would take the Knight that you run off that, and then buy either Spartan or Wizard,
Yeah, you would stake it. You stake it
Stake
to
it.
earn Spartan or Wizard. Yeah, you don't have to sell it.
Oh, no, yeah, right, sorry, stake it to earn Spartan or Wizard.
Yeah.
And then you can either reinvest the Wizard or Spartan or throw it back into your Guard USB LP to
Yep.
collapse time even further.
Or you could choose to play in a different LP pool and say,
Yeah.
hey, I've got my Guard BUSD. I'm going to allocate new capital to that every month. And whatever I yield, I'm going to create a new pool of Knight BNB or something like that. The three main the three main farms on there: Knight BUSD, Knight BNB, and Guard BUSD. Those are the three most stable and reliable farms over time. So if you're going to diversify your farms, those would be the three to start playing in right now.
Right. What about the Dark Knight? Is that a DEX? Dark Knight is that another DEX?
Dark Knight is a DEX, and it's on the Phantom Opera network, so it's different than BSC. And in the Mastermind, because you signed up already, right? Yeah,
I did.
Later on we'll go over how to start playing in Phantom. That's like an additional strategy. It only gets confusing because you first have to acquire FTM, which is kind of like BNB. It's the fuel that operates on the Phantom network. And it's a little bit trickier to be able to do that only because it's a newer network. It's doable. Like it's basically a 30-minute tutorial, but it's something that we would want to go through like on a separate session.
Gotcha. Okay, cool. Thanks.
Brandon, I got a question.
Go for it.
So the liquidity play or pool.
Yep.
Why I asked about automation is how many of those do you have going at one time once you've kind of mastered that, right? So I don't want to be watching 100 plays.
Yeah, exactly.
click. That's not.
Well, and that's why, in my opinion, it's better to have like a couple of plays that you just know are reliable rather than 50 liquidity pools across multiple chains all over the place. But then, yes, ultimately, you want to put it into an auto compounder so you don't have to think about it. So, and again, because I know these guys, because I'm in these other masterminds and communities, I know that the auto compounder for Knight is coming, which tells me, and they haven't said this directly, but it tells me the auto compounder for Dark Knight is also probably eventually coming. That might be end of this year or next year, but I'm primarily playing in these two. And on the side, I'm also accumulating a lot of Dark Knight. So my main pool over there is Dark Knight FTM, meaning it's the DEX plus the layer one, which would be the equivalent of Knight BNB over here on this side. So I'm staked in that, and I'm earning Dark Knight every single day, and I'm just slowly accumulating it so that when they get to that point, I'll then have a massive chunk to put into the auto compounder.
I know it's not a lot. Like you've got 2 or 3 to go in and harvest and then reallocate. Not a big deal. But for me, it's kind of the mindset of like if you're yield farming, you kind of automate it and you set it and forget it. I like the idea of that because then you're not like looking at it every day and going, oh my God, what's happening, right?
Right. Then it doesn't occupy mind share, which is ultimately what we're after. Because if you want to be a full-time day trader, you can make money at that, but now it's occupying your brain space pretty much all day, every day, even when you're not trading, even when you're not staring at the screen. Yeah. And most of us can acknowledge like, all right, what happens in between my ears is actually like my most valuable asset. And so I don't want to clutter up my mind with all of these other considerations when I could rather just like put it in a safe place and yet let it automatically yield over time.
Yeah. Okay. One last question. Thanks for answering that one. You and I have gone back and forth a bit on Binance, and I know you're going to create a private Facebook group. Yeah. I just have I have to navigate the Binance, how I'm going to take the funds and like buy the BNB with it, right? And it's like I think initially, and you made the comment, there's like an $800 service fee or something.
I don't know. I don't know what that was.
Yeah, so I'll watch more tutorials, but it might be worth like in that Facebook group if somebody else went through the Binance route like myself versus other routes. Because I had a KuCoin account set up, but I didn't bother sending it there. I sent it to Binance. So that's a good topic to go, okay, what's your experience getting from US funds into the Binance wallet, then purchasing BNB, and like what were the transaction fees along the way? So just
exactly. I know a lot of people on Binance, they'll fund it initially with a credit or debit card, for example.
Yeah, and I should have done that, but but it was still like, I think like the initial, it would have been for me because I'm Canadian. It's like the exchange crossover plus the credit card fee of 2%.
Okay.
Yeah.
Yeah. Sorry, I forgot you're from Canada. That's a whole other thing that honestly I don't know a whole lot about. I just know that other people I know who are from Canada have more trouble getting the money onto a centralized exchange and then transitioning it into their wallet.
Yeah.
It takes a little longer too. Like
Yeah.
for me, when I use Coinbase Pro, there's a 7-day waiting period. So I go from my bank account to Coinbase Pro. Before I can send it anywhere else, it has to sit there for 7 days.
This was actually a really quick transaction. It was set up as a wire transfer. So like when I had it in the account, like either that I was in the bank in the afternoon and the next morning it was there.
Oh, fantastic. Okay.
So that worked really fast, but it's going from Binance to buying BNB. That's the holdup for me right now.
Yeah. Okay. So you and we should probably just like do a quick little meeting and you can do a screen share and I can walk you through it. Yeah. That's why I was saying like in the mastermind, we'll do a few nuts and bolts sessions, which is like, let's just handle all the logistical stuff so that you can start transacting as quickly as possible.
That's like, I bet you 90% of why people are like, oh man, I don't even want to bother with this.
It is. I hesitated for years just because I was like, well, I don't know how to open a wallet. But as soon as I just like started researching it online, I was like, oh, this is so simple. I just like let my own brain get in my own way.
Yeah, it just takes time and you got to jump through a few hoops. And like, I don't like, for me, I'm not worried about the money going into the ether, like it's whatever. But it's like, I'm talking to 4 bankers and they're like, you're sending your money where? Like, oh, don't worry about it. Just send the wire.
Just send it there. Didn't I tell you?
Yeah. Anyway, thanks. Appreciate it.
Yep. You're welcome.
Part of the original 20.
Yeah, right on. I think you were like number 2 or 3, weren't you?
Yeah. Number 3.
So Brandon, you said you knew these guys and doing these projects, which obviously, gives you, a good base and you're comfortable with it. When we're trying to research and do that on our own, where do you suggest going to get the information? Just Google this stuff or
yeah. So there's a couple places I'll go initially. And I mean, this would be good. This would be a good thing for everyone to write down if you want to. Number 1, believe it or not, I go to Twitter.
Right.
Because good projects that have like a strong presence will have a Twitter account. And it's not just the person, but it'll be like a Twitter account for the project. And usually on their Twitter profile, they'll have some links. And I'm looking for, number 1, the website. I want to go to the website and scope it out. Number 2, I'm looking for what they call the Git book. And that might be available on the website, but the Git book is basically like a summary of the project and what it does. The white paper can help, but usually a white paper is more just like colloquial language to like tell you about the thing. Whereas the Git book is like in detail, everything that's involved. And for me, that's the first layer where if the Git book is like poorly worded and not really very clear or like misspellings everywhere,
right.
I'll be like,
didn't use spell
how
check.
much time and effort did they put into this? Right. Because it's a reflection of how well they'll operate in other spaces.
Right.
Also. Okay. So that would be the first thing. And then I would join their Telegram chat. Usually they'll have a Telegram, sometimes a Discord. Discord is a little bit more complicated and messy. I like Telegram because it gives you a window into how they are managing their community. So that one that I gave the example, AOD, Age of DeFi, where it just totally tanked. My first warning bell, not only did the price start to dip a little bit, but my first warning bell was the Telegram chat where people would ask questions and the developer would take like 3 days to respond. And I just thought like, if this is how they're communicating with their investors, how are they communicating internally? And is there even a team internally, or is this just one guy who's like trying to gung-ho do it on his own? So it gave me like a quick little just like warning flag, and I just pulled all my money out. I was like, I don't even want to play in this for like the possibility of return because it looks like it's going to go straight to the ground, and it did. So Twitter, Telegram, and then the website. And usually between those 3, you'll find the other resources like white papers, Git books, and those sorts of things. And then once you start following a project on Twitter, you'll start to get little notifications and announcements about who they're playing with. So sometimes a project will say, like, I'll start following them, just like, oh, I wonder what these guys are all about. And then a week later, they'll say, hey, everybody, we're proud to announce our partnership with Dark Knight and how we're doing this and that together. And I'm like, oh, interesting. Now I know they're playing well with Dark Knight. It doesn't automatically make them legit, but I know that at some point they've had a conversation with these guys over at Night and Dark Knight, and they're interested and willing to work with them. So it adds legitimacy to the project. So rather than just looking for random stuff, I'm looking for things that are connected to the things that I'm already involved with. That's just one way to do it, but that's how I'm approaching it personally.
Well, I mean, here in Jeff City, Missouri, I don't run across a lot of folks that are doing this stuff. So
right.
like Bitcoin, what the hell's that? I mean, you just don't find that out here with the hillbillies. I mean, we just don't do,
That's the nice thing about having groups like this is,
exactly.
Like I said, initially it's going to be a small mastermind, but after the first 20, then I'm going to open it up again for another 20 at an increased rate. And then it's just going to, over the course of this year, it's going to gradually grow as a community. I don't want it to just like explode into thousands of people. I want to still keep it pretty tight knit, but eventually this is going to be the place where you can come and trust that, like, okay, again, not financial advice, but this is projects that are actually doing some good in the DeFi space.
Well, it just helps to have people who are doing the same thing to bounce ideas off of and questions. And, I mean, like I said, now not everybody here is like the show Ozark.
Yeah.
We're not all like that.
Right.
I mean, we don't really grow poppies. It's more meth and weed. Is what you're going to find instead of the heroin. But we're really, I mean, there may be a few Marty Birds around that are doing some things, but
and the reality is most people don't have
circle,
close friends that they can talk about crypto with. As soon as you bring up the topic, like 19 out of 20 of your acquaintances are gonna be like, what are you talking about? Like, let's talk about
what are you doing with that stuff?
Or they're gonna just say, oh yeah, I bought some Bitcoin, or I got Bitcoin and ETH. And it's like, yeah. But so that's hodling, right? And so you're just, but what are advanced strategies of like serious, consistent returns? And then what do you do with that? I mean, more, advanced investment strategies than just, hodling it for years and years and years.
Right. And like you said, the numbers, when you look at the numbers that are made in crypto, they're mind-boggling.
Yeah.
And when you're from a small, conservative area, that's not used to thinking big at all in any realm of their life, when you start talking about doubling, tripling, quadrupling your money in a year, they're like, oh, that doesn't happen. That only happens on
it's
the
fake.
coast.
It's a scam.
Right. It's going to be true.
Yeah. So it is good to have the community, and I appreciate you putting this together and doing this, because it was exactly what I was looking for when you came out with it. So thanks, man.
Yep,
Appreciate
you're welcome. And you're already in the mastermind too, right? You already signed up?
Yeah, I'm in.
Yeah, okay, that's what I thought. Yeah, cool.
Yeah, I'm in, man. I'm ready to go.
Yeah.
Brandon, you need to make like jerseys, like our number. I got the number 3 or number 4. I'll take that in a jersey.
Well, yeah, eventually we'll do stuff like that. I was thinking today, I was like, it'd be cool, like once we've got a core group of like 50 or 100 people, to do like an in-person event and just like rent out a big Airbnb and everyone comes and hangs out and just like jam on crypto strategies and make jerseys. And
I got a question, Brandon. Well, I got to pop off, but one last thing. Like, I've got a couple of buddies that are involved in projects that I want to remove. Like, I know these guys, so I want to, like, with a lens, like we're talking about, but there's value in what they're doing, and these guys are like brilliant. Right? I went to university with one. He lives in Singapore, and he's got a DeFi project that's kind of related to gamification. And it's cool, but I'd love to be able, like, hey, can we like look at it through our lens so that I can take my personal connection out of it and like use that as an example of like, here's how we would look at that project.
Yeah. I mean, the first thing I would do would be the criteria around how does it integrate with other projects. And usually the gaming stuff, and I mean, granted, this is an area I don't know a ton about, but usually the gaming stuff is playing well with other like farming and yield yield farming type of projects.
Right.
Do you know like what their setup is? Is it like
I'm just gonna pull it up on Twitter actually.
Yeah, is it like a play to earn kind of a thing, and then you stake the tokens that you earn to make some?
How does he describe it? So it's GameFi for the metaverse, and what they describe it in their Twitter profile is they provide games, store NFTs, and DeFi for your game assets, and they've got a denomination that's coming out soon. So he's been in this space since we graduated university like 20 years ago. So he's all crypto all in. And he's been just, I've been following him forever, just watching him be like the promoter, right? He's like, my daughter's got this wallet now. And she's like 14. Like, holy shit now.
Do you have his white paper or his Git book that kind of?
No, I haven't even gone that far yet.
Yeah,
no.
Okay. That'd probably be the first step. Like in terms of.
Would I get that off his website, or where would I get that from?
Usually it'll be either on the Twitter profile or on the website. Yeah, if the Twitter profile has the website, then on the website it'll say like info about us, white paper, Git book, whatever. Or if you know the guy, you can just ask him. Like, hey,
I'll reach out to him because he was like just a brilliant guy. We were in a business program together, and I think he bounced early. He just said, "Screw it, I'm gonna move to Singapore and building companies," and it was awesome. So yeah, I am gonna reach out to him, but I wanted to like be arm's length just to do like a little. Like dive into what his project's all about because I have a personal connection, right?
Yeah,
so,
and then you would want to see on the Twitter profile like how do they talk about other projects that they're interacting with?
Yeah,
because it's unlikely that they don't have partners, not like official partners, but like projects they're working with. Especially if it's going to be like NFT/gaming, it could be like an NFT platform, meaning they would want to partner up with other people who are minting NFTs.
Yeah, worth like throwing it out. Like if we could do the mastermind, like here's a personal connection. Love to put it through the process, like our own.
For sure.
Yeah, cool. Okay, that's all I had. Nice to meet everybody on here. I love the Ozarks comments. That just kills me. Awesome. Thanks for setting this up, buddy.
You're welcome, Paul.
I'm so pumped.
Any other final questions before we wrap up here today?
Nope.
No, all good for me anyway. But thanks a million for putting on the class. Really valuable, really useful. Awesome. Yep. Cheers.
You're welcome.
Yeah, I'm good. Yep. Thanks, Brandon.
Good to meet everybody. We'll see you around, right?
Yep.
Cool. Thanks,
Have
everyone.
a great day.
Yeah. See ya.
Guys, take it easy, guys.